Hello, and you're welcome to Global Business Insights, where we take a deeper look at the headlines from a business perspective. This week, the big reveal may be from what is said at the Jackson Hole United States event, August 22nd to 24th meeting of central bankers, as traders hope for a fresh rate cut signal to keep rallying, following the, of course, roller coaster of recent economic data. Softer inflation data and strong retail sales report may have tempered down predictions of a 0.5 percentage point cut in September, also soothing fears of a recession or hard landing. Goldman Sachs economists also last week lowered the probability of a US recession in the next year to 20% from 25%. Japan's national and Tokyo governments are seeking a $4.7 billion valuation for Tokyo Metro as they prepare to list the subway operator by October end. And in Zambia, the energy regulator is considering an application to increase electricity tariffs by as much as 156% as an emergency measure to cover drought-induced losses. Drought has caused water levels to plunge at the hydropower dams, and that ZESCO, that's the utility, relies on for about 85% of generation. Analysts see oil prices under pressure from persistent demand concerns, but geopolitical risk premium and the recent rally from last week's stocks crash is still helping to keep Brent mostly over the $80 mark. EVI still sees a sub $80 price for the Brent standard in the second half of the year on average. Brent slightly under $80 early this morning. Last week in the US, the Energy Information Administration crude oil inventory data showed an unexpected increase by 1.3 million barrels for the week ending August the 9th. This marked the end of a 6-week decline and disappointed expectations of a 2 million barrel drop, and diverged from the previous week's decline of 3.7 million barrels. Lower interest rates in the US, if we do get a Fed that persists in cutting rates, is going to be a boost for economic activity in the United States, and fuel oil demand would also be higher. Sluggish China demand and softening jet fuel demand as reduced consumer spending impacts travel budgets will, however, continue to weigh on oil prices in the coming months. Today, our deep dive is on the Nigerian oil and gas industry. We have as a special guest to discuss the Nigerian oil sector, Mr. Victor Eromosele, CEO of EMI Consulting and Executive Director of the energy think tank Center for Petroleum Information, CPI. Also the author of the authoritative reference work, Energy Insight Nigeria. Welcome back. Over a decade ago, Nigeria had huge bragging rights in the oil industry, a continental leader positioned to take off as a major industrial hub. But alas, that has not been the case. Mr. Eromosele is a leading industry person and author of the authoritative reference work Energy Insight Nigeria. Is here to share his thoughts on Nigeria's oil sector and comments on some of the industry hot buttons like the Dangote refinery.
Every African country has oil now. I think 54 of the 55 oil countries in Africa have oil. So Nigeria doesn't have the bragging right it had many, many years ago. And so we just have to step up and do things differently and do things smartly. You have a piece of legislation, make it work and make it work fast. We have to be more aggressive. We're not aggressive enough in terms of getting investment into our own industry. I mean, I've seen many years of the industry, and I can tell you that in the last few years, we've not really made as much progress as we made many, many years back. Because if you consider that as far back as 2012, we were already doing well above 2 million barrels a day. And in late 2022, I think August, it went down as low as 900,000 barrels and became number 4 in Africa. So that is not my idea of progress. Today, we're struggling around between 1.3 and 1.6, depending on which numbers you want to believe, whether it's OPEC or the more official figures from the local sources. But clearly, whichever way you look at it, that is not a sign of progress. The question is, why are we in this state? And the reason is we are not investing enough. You invest more and then you get more. When we choose to invest more, I'm sure we would. And then the second order reason is the fact that the PIA was delayed for many, many years. And now that the PIA is out, it's chicken and egg situation in the sense that in one way it enables, in another way it creates constraints. So how well are we using the PIA? How many new investors have we had? Not too many new investors, and even the current investors have had to have parts of the PIA tweaked in its implementation for it to work. So there's quite a lot of work for the authorities to do to move the industry forward. First, match words with action. When you plan, make your plan and execute it. Recently, I'm sure you heard that when the CEO of Total Energies in a forum recently said, look, Nigeria, you do a lot of talking, but action is delayed. And that's why we're moving so many millions or so many hundreds of millions to other countries. But it's a good thing, too, that within the indigenous players are stepping up. As you do know, in a few years' time, 4 big players will now be stepping in the shoes of 4 IOCs. And that is a good thing by buying up most of the assets. In fact, it's said that about 75% or more of the assets in a couple of years' time in the Niger Delta, guess who will be the operators? Not IOCs anymore. They'll be indigenous players like Seplat, Chapal, Oando, and Renaissance. So that's a period to look at, and that will have its own challenges. We do hope we can rise to those challenges and move the industry forward. Nigeria has always been a story of potential, hasn't it? Not just in oil and gas, in every other sector of our lives. We have the potential, but potential is nothing. It is what you do with your potential, and how well you run with it. The decade of gas, when did it start? I mean, this is 2024. So we've already lost 4 years. What have we done in the last 4 years? Have we done as much as we can? Maybe not. But there's a lot of noise. The noise is quite important because without that noise, we will not. But the most important thing really is how much of these words do we convert to action. We are a bit too slow. Bureaucracy, delay. That is probably the theme of the industry in the last 30, 40 years. Delay. If we can move faster on our projects, definitely we'll make progress. One thing I can tell you that we're sure of now is the train 7. Train 7 is on track, and hopefully in the next 2 years it will start producing, and that is good. But think about the delays. I mean, I used to be in LNG years back, and I can tell you that project has been delayed for nearly 20 years, and it is now that we're talking about it. And ironically, they took investment decision. Guess when? They took investment decision in the middle of COVID-19. But we lost all the good times when we will have taken investment decisions. We never took investment decisions. So if we can avoid these delays and really, as it were, roll up our sleeves and start doing the right things, then we would. Then the other key thing is that if you look at gas, we have lots of infrastructure problems. All over the place, you have got dots of pockets of gas, but there are no links. There are no infrastructure, no pipelines linking them. So there's a lot of space for investors to do all this linking so that we can move forward. Talk less, work harder. I think that is the way we're going to move forward. And then if we did that, I'm sure we'll go places. But the investments too will come. All this talk too saying that, gas is gas is transition fuel. That is not enough language. It's beyond transition fuel. We need to optimize what we have. Those molecules have to be converted. And most of those molecules are tied to oil and gas installation because they're associated gas. How do you get this associated gas converted when you have the crude oil itself, which it comes from, been disrupted? So these disruptions must reduce if we're going to build our gas infrastructure. I mean, we should congratulate Dangote for taking the initiative. I mean, NMPC for many years had wanted to build refineries, and those refineries have never taken off. The old ones, they've had plenty of problems with them. So Dangote must be congratulated. We hope that all the new noises we're hearing, the authorities are all trying to support Dangote, renew their support for Dangote. I think once they renewed such support, I think we'll start making the best. We simply wish him all the best. I think it's a good thing that we have. Dangote refinery will be the largest refinery in Africa and Europe. So because it's disruptive. If anything is disruptive, obviously it will be subject to the sort of controversy you saw. So there was nothing unusual about the controversies. But I'm sure it will all fade out, and we'll start making progress. I think we are all hugely, as Nigerians, extremely proud of that project.
The Tinubu government has announced executive orders to reform and revitalize the Nigerian oil and gas industry by broadly enhancing local content compliance, reducing contracting costs and timelines, and providing tax incentives to promote investment in the industry. But execution and monitoring of improvements are yet to be seen as vigorous. More importantly, to eliminate unnecessary delays requires more than orders. It needs structural and bolder adjustments on who does what and who is involved and how they do it. That means major process reimagination and digitization. If a transaction takes 2 months to conclude in Saudi Arabia or Houston, it should not exceed 2 months in Nigeria instead of an alarming 2 years in some cases. It comes to the value added by partners and professionalism of regulators and the courage of the government to make the key changes which would challenge the status quo interests that have upheld these delays and milked these bottlenecks for several decades. Given the time it took the PIA to be completed in a rapidly changing context, many aspects of the Act have been rendered out of date even as it was signed, and implementation, of course, had to be selective. Meanwhile, the oil sector is much more competitive than it was 5 years ago, requiring a much more aggressive approach in attracting domestic or international investment. In Asia, Hong Kong stock market led gains boosted by Chinese technology companies. China will also announce its 1 and 5 year loan prime rates tomorrow. The Bank of Korea releases its rate decision on Thursday, and we have inflation data from Japan and Singapore on Friday. Well, that's it from me on Global Business Insights. This is Bode Oshosami. Thanks for sharing and following or subscribing on Facebook, LinkedIn, or YouTube and X. Please send your comments. Again, thank you so very much for watching. Bye-bye.